Serena, welcome to the podcast. Love having you here.
Awesome. Thank you so much. It's always an honor to be able to be on other people's podcasts.
Yay. Okay, so let's just dive in because that's what we do on this show. What does it mean you hang your hat on this idea of profit conscious business decisions? What does that mean?
Yeah. So there's a couple different camps of people that I've noticed over the years of business owners, right? We have the business owners that are kind of their head in the clouds and they're like, everything's going to work out. I just know I need a launch and the money will just flow to me. Right. And we also
the money will just flow
mindset.
To me. Okay. Yeah. All right. I like that.
Or
yeah.
It's I'll figure it out somehow. It'll just happen. Right.
Yeah.
And then we have the other complete opposite end of the spectrum of business owners that are really, really nervous about spending, kind of white knuckling things. Right. And, and where I see the most success and good business decisions happening is when there's a mixture of both. So that's the middle, where it meets in the middle, where you are you're open to possibilities. You are comfortable with your ability to make money, but you're not just throwing things to the wind and being it'll all work out somehow. I don't know how, but it's going to work out. And you're also making good decisions on and aware of your numbers. So you're not too afraid to spend on certain things you need to spend on and things like that. So that's where I kind of developed. I was like, what can I call the middle ground?
Right.
And so I came up with Profit Conscious CEO because the other thing too is, especially in the online business world, is probably honestly in every type of business, there's the vanity metrics of oh, we're making $1 million in sales and stuff. But it's but you have a huge team, you have lots of overhead, you have all this spend that's happening. What are you really taking home at the end of the day? And that's your profit.
Yeah.
And so I try to work with people of really paying attention to that bottom line number, your profit. You'll hear lots of accountant jargon from people or business owners, right? Where they're bottom line, top line, blah, blah, blah. And so I try to bring everybody back to okay, you're going to hear this word and this word. These all mean the same thing. So bottom line means profit. That's the number you really want to be paying attention to. And, what I like to do with my clients and people that I mentor is backing into the revenue that you need to make to get to the profit that you want. So we start with what do you want to bring home? That's your profit, basically. And then we reverse engineer your revenue goal. And then it doesn't matter whether you're making 6 figures, 8 figures, whatever, because you already know what your end goal is, the profit. And so you don't end up chasing these vanity metrics, and you can be confident and calm around what's actually happening in your business.
Yeah. And you can grow right year to year, and you can continue to scale, which is what we all want. Okay. I love what you're saying. And you're right. We throw around a lot of jargon, right? And I don't want us to be afraid of the jargon, right? I just want us to know what we need to be aware of. And you said, aware of your numbers. So let's talk through what numbers we need to be aware of. So you talk about 4 key performance indicators for our online businesses. So talk to me about number 1, revenue by product. What does that mean?
Yeah. So one of the big things that I noticed when I started helping business owners and taking over maybe from other bookkeepers or a business owner that was doing their own bookkeeping is when you set up your QuickBooks Online or whatever you're using, it gives you a default, categories. And it's usually sales or product sales, or maybe you have both in there. But with online business, we generally have a lot of several different revenue streams. You might have one-on-one coaching. You might have digital products, mini courses, affiliate revenue, podcast ad revenue. And it's really important to track all those separately, because then you know where you need to turn up the dial, where you could possibly scale back. What are the things that are not making money that you might have thought were? That happens a lot. And so what I like to do is every month with my clients, we look we make sure everything's set up appropriately. We create rules and we and set up their bookkeeping so that it makes it easy to track things the way that we need to be able to make decisions, right? And then we start looking at the numbers every month and looking at the product mix. So that would be like, what is of the total revenue, what is our signature program making percentage wise versus affiliate revenue? And then we'll track like, okay, this one is always your biggest earner. So if we can just slightly turn up the dial on that, you might be able to really scale. And then sometimes sometimes what happens is we will look at those numbers and the client will be like, this membership or whatever I know is my bread and butter, but it is very draining. So they'll make a conscious decision to cut the program knowing that they're going to lose that revenue stream, but they know what is going to happen from it. And so they're already planning to replace it or whatever. If you don't know how much that revenue stream is and you just cut it, you could, really debilitate your business.
Okay, I love what you're saying here, because sometimes I'll talk to course creators who say, oh, I love this. Maybe they have a membership, right? And they have a community that they're selling into, and they put 60% of their time into it, but only generates like 10% of their revenue, right?
Yeah.
It's like you're putting too much time and energy. It might feel fun to them, right? Because they're like, oh, they get their needs met. Like going back to my Tony Robbins days, and that's why they spend so much time there. But from a profit perspective, it doesn't make sense. But you don't know that unless you know your numbers, right?
Exactly. And sometimes you do end up being like, I know this is in the business world, you call that a loss leader.
Yes.
When it's like, this is how we're getting people in. We know we're kind of losing money on it, but the back end, whatever we're selling them into or moving them into this other product, we have to have that stepping stone. So sometimes it makes sense to keep it. And it's kind of the same thing with with events, like in-person events, especially if you host a mastermind and you're like, we're going to include 2 events per year or whatever.
Right.
That's usually what gets people into the mastermind. But if you're not careful, that can events are expensive. They're rarely profitable. So you have to go into it knowing that like, this is what is getting people into the mastermind. We have to have other products or other upsells or coaching or something to recover the cost of the mastermind, but just you're not going into it blindly. So
yeah, I think that's so smart. And that's like tripwires, right? So we talk about tripwires on this podcast. You're not going to make money on your tripwire, right? But it's going to be those great leads that hopefully buy your mid or higher price point course, or it leads to your mastermind or whatever it is. Totally great with that if it's a loss leader. But just knowing that though, and knowing and then putting that time and energy into it, just being smart, right? But again, you can't do that unless you know your numbers. So I think that's so great. Okay, tell me about the next key performance indicator. It's also about profit, net income. Okay, tell me the distinction on this one.
Yeah. So on the guide, which I think we're probably going to link in the show notes, there's the number 2 indicator is profit, and then there's a dollar sign. It is also known as net income. So some people will call it net profit, net income, net operating income. There's lots of various names for things, but this is basically your revenue minus all of the expenses it costs to run your business. Or you can also calculate this based on product or department if you are, tracking things that way. So, or even on a project, right? You could have, this is the revenue from this project. These are all the direct expenses for it. This is our gross profit for this project or whatever. So tracking your profit, like I kind of talked about at the beginning, is really important to know like what is left over after running your business that you can pay yourself. And most small businesses are LLCs. So when you pay yourself, you don't see that as a line on your profit and loss statement. You are basically taking out of the profit to pay yourself. So that profit number is very important. If you are a business structure like a corporation or something, you would probably be on payroll. So you would see your salary as a line item, but you still want profit left over in the business, because that's what's going to allow you to create an asset that is maybe sellable in the future, or to use that profit to reinvest into the business. So it's still a really important thing to maintain. And the other thing is, which we'll get into in the fourth KPI, which is net profit margin. And you're just looking at that as a percentage. But in online business, this is one thing that I have a lot of business owners be like, I want my profit to be higher than this and that and whatever. And I'm like, you do realize that like most other brick and mortar businesses and other industries in the world, their net profit is like way less than we're able to achieve in online business.
Yeah.
So a lot of it too is like just putting things into perspective and comparing these to your own numbers or to industry numbers month over month. It's not very valuable to just look at a standalone month of your numbers, because then there's no context. Like, okay, great, this is what it is, but like, how do I know if this is good or bad? Well, that's why we either compare to your company last month, or we compare to the industry averages, things like that, so that you have the context and you can figure out, oh, okay, this is good.
Right. I just want to go back for a second, Serena. So I know you mentioned QuickBooks. We have QuickBooks. We love it. When do you know, and you might say like Gina immediately, when do you know when you're ready for something like QuickBooks or FreshBooks? When?
Yeah. So for me, it kind of, I would say you're ready for a system if you don't know how to create spreadsheets.
Okay.
And if you're not going to like really stay on top of things, because what QuickBooks or Xero or FreshBooks do for you is they allow you to link your bank accounts and automate all those transactions going in and out. So it eliminates a step of like manually plugging things into a spreadsheet, which you could totally do if you wanted to. But with online business, we tend to have a lot of transactions.
Yeah.
And so that could get very monotonous and cumbersome.
I'd be nowhere without QuickBooks. Nowhere. Yeah. I don't even have, I'm terrible at spreadsheets. So
yeah,
it is my
so
gift. Yeah,
that's
like
my
QuickBooks.
recommendation there, honestly. And
Okay.
most of the time when people use a spreadsheet, they're not going to stay on top of it. So it is an added expense to your business, right? It's a software cost, but you can use the basic QuickBooks or Xero or whatever, and just get started. It's kind of like, I like to compare it to personal finance, because most people, I feel like, are kind of aware of personal finance, but it's like, if you had to look at your personal credit card statement and manually record what was going on every month, like, would you actually do it?
No. But like people used to balance their check. I think some people do that, right?
Yeah,
balance their checkbooks. And I'm dating myself now, but yeah, not that person. So, and if you know you're not that person, get it automated. Like that expense is justified, especially we are building businesses for the long term. We're just not one-offs here for listening to this podcast. So that's why we need that system. Okay, that's great. Now tell me about the third indicator, which is about our how much we're putting out there, right? Our operating expenses.
Operating
tell me more
expenses.
about this.
Yeah. So this one I have as a percentage. So you calculate it by taking your total expenses for operating your business, and that's going to include your software, your wages, contractors, everything that you're spending basically. And you divide that by your total revenue to get your operating expense percentage of revenue. And this is a really good thing to track, because it'll show you like proportionately of, am I spending too much of my revenue? Right. So there might, especially with fluctuations in revenue, it's like you might have a really big revenue month, and when you compare the total expenses, it's relatively low. But if your revenue dips, it can indicate an issue, especially if it continues over time, where it's like, oh man, our expenses are 80% of our revenue. That's only leaving you 20% profit at the end of the day. And if your numbers aren't huge, that 20% might not be enough for you.
Right.
So that's something that we track monthly, and we'll compare this month to last month of the percentage, and we'll also compare to the last quarter if it's a quarter end, or the same time last year. So that's what you can do with all of these numbers, and it provides the context, right? Of like, if it's decreasing, you might be like, well, maybe we missed recording something because it should have been higher than that. Or if it's increasing, you can pinpoint. We will actually look at the profit and loss, every single expense line item as a percentage of revenue as well, because there's certain things that we want to control our expenses. And it's like for wages or salaries, it's like, okay, our benchmark for our company is to not spend more than 30% of our revenue on wages. Because otherwise, if it gets higher than that, we might not have enough money to pay the rest of our
pay
expenses.
the rest, yeah, pay the rest
And
of
the
expenses.
owner of the company. So you can kind of create your own benchmarks of what you're comfortable with, and then you operate your business according to those benchmarks, and then you'll know if like things are getting out of hand. It's like, okay, well, normally our advertising is 5% of our revenue. This month it was 10 or 15. Let's look to see what happened. Are we getting a return on that investment? Maybe it was during a launch, so that's to be expected. Those kinds of things. Sometimes it's not just because something pops out like that and looks different than a following month. That's where it illuminates like, okay, let's dig into this and see what happened. Sometimes it's like, it's okay, it's legitimate, but that's you getting comfortable with your numbers. And looking into things and just making sure that things are correct. The other thing too is if you have people helping you in your business and access to some of your like bank accounts or credit cards or whatever, it's even more important to monitor these things, because having an anomaly of like that, where it's like, oh, this one category jumped way up higher. If you're not paying attention to those things, some people could be stealing from you. You know what I mean?
Right.
Like,
or something, or you got double charged or something. Right.
Yeah.
We have a great bookkeeper who will flag that. Like she is very vigilant. Right. Good. And she'll be like, okay, what's happening here, guys, to my husband and I. And I love that because I know she's keeping an eye on that. Right. So my listeners might not be quite there. Like maybe they have QuickBooks, but they're managing themselves to start, and then they hire a bookkeeper. So I'd love to eventually get that in their phase. But you're right. And I think sometimes too, Serena, like we love like getting the pings that we get a sale, right? But we're not vigilant about the other numbers, right? We love the adrenaline hit of seeing those numbers, but then we're like, okay, let's just trust in the system. And like, we have to be vigilant, I think. And do you set like a certain day? Like you said, you check in monthly. Like do you every 25th of the month, do you have something on your calendar where you're like, okay, time to pull the reports? Like what's a good system for that?
Yeah, for me personally, internally with my own numbers in my businesses, I have 2 businesses. I actually check in with my bank accounts weekly. And then monthly after, so I have someone on my team also doing the bookkeeping for my businesses.
Which is great,
because we're a team of bookkeepers, and I'm like, I'm gonna
of course you have somebody
this.
looking at it. Yeah, that's great.
But when she's done around the 15th, she'll be like, okay, it's all ready. Like, and then I'll run the reports and I'll sit there and just kind of comb through stuff. Sometimes she'll have questions too. And this is how we operate with our clients as well, of like, if there's something we don't know how to categorize or something wasn't reconciling, she'll just leave me a note and be like, will you look at this and categorize these things, because I didn't know where to put them. And so, yeah, I do that around the 15th of every month. And depending on how frequently you have your bookkeeper doing the bookkeeping, for instance, most of our clients, we actually do the bookkeeping just once a month at the very beginning of the following month, and they get their reports by the 15th. But if you're a larger business with lots more activity, you might want to have your bookkeeper do something weekly, so that maybe they're not running reports weekly, but they're reconciling and categorizing everything weekly, so that you can go into your QuickBooks and look at your real-time reports.
Okay, I love that.
So that's always a possibility too. Like if that's something you need, ask your bookkeeper, or when you're looking to hire a bookkeeper, tell them, I really would like to look at my numbers weekly. Is that something that you can do?
Right. And see if they can accommodate it. Right. And that's part of seeing if they're the right fit for you.
Yeah.
Okay. Let's get to the 4th indicator, which now we're talking about net profit margin. Okay. What does that mean? That's a percentage one too, right?
Yeah, it's a percentage. Okay. So you're calculating it the same that you would calculate your operating expense margin, where you take your your profit number, your net
Mhm.
income number, your bottom
Yep.
line number, all means the same thing.
Right.
That bottom number on your P&L statement, you divide it by your total revenue to get your percentage. And you can call it your net profit percentage, you can call it your net income percentage, or margin. Margin's another way of saying percentage.
Right.
So, and this is another one of those things that maybe not so obviously, but this needs to be a positive percentage. It needs to be a positive number,
Yes.
not negative. Because if
Yes.
it's negative, then that means that you're spending more than you are bringing in.
Yeah.
And we want this to either grow over time or have a comfortable average year to date. So I know with the launch model, it gets sometimes if you look at your numbers monthly and you're launching, it is scary because there are going to be months where
Right.
you
It's gonna
are
be
operating
dips.
at a loss.
Right. Like maybe over the summer you went up for the launch, right? And then
Yeah.
and that though. You have to build that in, right?
Yeah.
Yeah.
And so what I like to do is we always look at the monthly numbers, but we also always look at the year to date numbers, which means your total for the year. So right now we're in October. So we just closed quarter three, ends in September.
Right.
And so all of our clients got a set of quarterly financial statements that showed each quarter as a whole instead of just monthly, so that they could compare quarter over quarter, which is really helpful with the launch model because typically you do something every quarter. Some sort of revenue generating activity in the quarter. And so it helps you see your quarterly profitability, and then your year to date is just the total of the year. And then we'll compare that to like what happened last year this time. So it's like, is our profit percentage higher than this time last year? Is it about the same? Is it dipped? If it dipped, why? Oh, we launched one less time than last year. So
Right.
yeah.
So knowing that, I think the whole beyond, and this is why I wanted you on this episode too, Serena, is just not being afraid of the numbers.
Yeah.
Right. And I think setting, even if it's once a month to start, and maybe you do twice a month, but just getting used to pulling reports, like if you're doing this on your own and checking the numbers and taking the fear out of it.
Yeah.
Right. Because that you are empowered when you know your numbers.
Mm-hmm. Yeah, I totally agree. One of the things that I've done a talk on becoming a profit conscious CEO in various programs and at retreats and stuff. And I ask the audience to make a pact with me. And that pact is to like, don't ignore or avoid your numbers. It's going to be uncomfortable, but like, can we all agree that we're trying to run a business?
Yeah.
And it's kind of required.
Right. And this is part of being a business owner. This is part of being the CEO of your business.
Yeah.
So, okay, I love that. Make a pact. That's great.
Yeah. So I'll ask the listeners today too, like, just like, let's make a pact that we're not going to avoid. It might not look pretty at first when we start looking at it, but you're not going to know what to correct or how to make changes if you don't at least look to see what's happening.
Right. If you don't, you aren't aware and understand these numbers. Okay. This is so helpful. Thank you for breaking it down. You break it down in a way that even my brain can understand, which is great. So, because I'm struggling with my fourth grader's math right now. So there's that. Let my listeners know where they can learn more about you. And I'll link to the key indicators PDF. And then where else can they find you, Serena?
Yeah, I'm on Instagram at Of Course Bookkeeping, and also pretty much all the places with that. I'm on LinkedIn. I'm just Serena Shoup CPA. Shoup is how you spell my last name. I should pop up. And you can also just go straight to my website and email me or fill out the contact form. It's ofcoursebookkeeping.com. I've got some resources up there as well. And yeah, I'd love for you to connect with me on Instagram and let me know if this was valuable. And if you had an aha, I'd love to hear about it.
Let us know. Did you have a money aha? Did you have a profit percentage?
Yeah. Or even any questions, honestly, if you want clarity on anything I talked about, I'm open to having conversations. I just want people to not feel scared to reach out for help around this, because there's definitely some accountants out there that make it scary, feel stupid.
Right. And they make you feel and that's not okay.
Yeah.
So, and thank you for making us feel empowered instead of feeling like dumb that we don't know this. So really appreciate that.
Thank you.